Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the energy sector of the Trinidad and Tobago Stock Exchange and the lone member in that sector, Trinidad and Tobago NGL Limited, or TTNGL. Now, the company, or the holding company rather, would have reported very interesting and positive results for its half year ended June 2022. Let's take a look at what they would have posted in terms of earnings and what investors can expect in the coming months ahead, with one eye, of course, on the budget, with energy being a key driver for the Trinidad and Tobago economy. So turning to TTNGL's results for that half year ended June 2022, the group would have reported an earnings per share figure of 76 cents per share, which was a very commendable 40% increase from the 54 cents recorded in the prior comparable period of June 2021. Share of profits from its joint venture or sole investee company, that is Phoenix Park Gas Processors Limited, would have increased that 40% from 84.5 million to 118 million. Otherwise, no major changes or notable changes in terms of interest, income, or expenses, leading to that profit after tax figure climbing that 40.5% from 83.6 million to 117.5 million. So certainly makes for better reading for investors in TTNGL at the half year mark of 2022. When we take a look at what would have driven most of this performance, well, it would have really been attributable to a sharp increase in the prices of natural gas liquids as measured by the Mont Belvieu price indices. We can see that butane prices in that blue color would have increased an average for the half year of $1.53 US per gallon, a 60% increase from the 96 cents in the prior comparable half year period in 2021. Propane prices also climbed just about 44% from from 88 cents per gallon to $1.27 per gallon, and natural gasoline prices also increased 56% from $1.40 US per gallon to that $2.19 level. So certainly much more buoyant prices. And when we take a look at the historical trend over the past several years, we can see that a nice upward trend in energy prices, of course, supported to a significant degree by some of those geopolitical tensions in Eastern Europe right now and the impact on energy commodity markets at a global level. At a domestic level, when we take a look at production, not as favorable reading in terms of production. We can see that for that January to May 2021 period versus 2022, with available data from the Ministry of Energy and Energy Industries, we can see that production of NGLs in terms of barrels fell from 2.59 million to 2.49 million barrels, so roughly a 3 to 4% decline in production. However, for the same comparable periods, there was 8% odd increase in exports from 2.18 million barrels to 2.37 million barrels, and that would have been facilitated by drawdowns in inventory at the national, at the company level, in particular for PPGPL. So despite slightly weaker production, there was actually an increase in exports over those comparable periods, which would have helped TTNGL's results for that half-year period. When we take a look at dividends per share for investors, well, dividends are heading in a better direction after a fairly challenging two-year period at the half-year period of 2020 and 2021, where there was 0 and 25 cents per share paid respectively. The half-year dividend declared was 35 cents per share, and that is good news to investors. And again, in that bright green, that earnings per share for at the half-year mark up that 76 cents per share. Of course, investors will have one eye keenly on the final dividend that could be declared by TTNGL, which would take place sometime in 2023, early 2023 for fiscal 2022. And another value metric of TTNGL also shows relatively good value for the investor when comparing the book value of the push on a per share basis of net assets of the company versus the price that investors are paying. We can see that the market to book or market price to book price is about 0.7 times, which is representing relatively good value compared to the last 3 years versus in particular 2019 at the half year mark, where that book to value ratio was a bit higher at 1 time. So a lower value typically indicates slightly better value for investors or shareholders, and that certainly is the case with TTNGL. It would appear right now with a book value per share of $32.30, and NGL currently trading at $21.87. And at that level, it is trading at a price earnings ratio of 6.22 times, Again, that is the sector average, given that it's a lone company on the Trinidad and Tobago Stock Exchange in the energy sector. And the dividend yield of the company is, of course, or TTNGL rather, is 3.9%, which is heading in the right direction and improving. So on the basis of buoyant NGL prices, international expansion and diversification of TTNGL, and it has been through its investee company, PPGPL, making measured and deliberate strides in terms of international diversification, not just in the US, but also looking closer at home at the regional level for investment and expansion opportunities, with talks of a nascent domestic production recovery on the cards. And of course, we look for more information coming out of the fiscal budget for 2022-2023, and of course, those increasing dividends, which will be music to the ears of investors in TTNGL. Bourse is going to maintain an overweight rating on TTNGL for the time being. Well, that's it for this week's edition. Next week, we begin our coverage of the budget for fiscal 2022-2023. And for more information, of course, you can give us a call at 226-8773. And email us at invest@boursefinancial.com, and check out our website where all of our research is absolutely free at bourseinvestment.com. So see you next time on the Bourse Report, and have a safe and prosperous investing week. See you next time.